today's video, we're going to be talking about the process of taking all the years of every situation, good, bad, and ugly, and putting it together. Our minds are for solving problems, taking in the information, figuring out the right way to solve the problem, and then applying the correct strategy on the problem so that we don't get those same results. We get different results. One of the methods I use for this process is if, then what? A lot of times when we get a new system or indicator, we think it's going to make us a millionaire. But here's the thought we don't think about. If it does not work, then the results of that will be what? And this is the way computer programs work. If, then what? Processing the information. But it's not necessarily how our mind works. If it works or doesn't work, then I will have the reward or not have the reward. And what am I going to do with that information? And here's what I mean by that. Did you know that bear flags only had a 67% chance of success? That means 32% of the time this breakout continuation, up or down, is not going to happen. If it doesn't work out and I'm part of that 32% not working, then I need to really consider what I'm going to do to solve this problem. Triangle patterns are better at almost 73%, but that still means that 27% of the time, these two trades are not going to work out for you. Harmonic patterns do better than that at 80%, in some cases up to 90. Even though 80 is an awesome number, losing 20% if you're all in will destroy your portfolio. That's why we have to consider this if then what process. It confirms statistics because there is no 100% statistic in trading. Now, with all those things in your mind, let's talk about a trading plan. Trend is the absolutely most important thing, but not isolated to itself. It has to have support and resistance confirmed. With support and resistance, we will be able to locate momentum. We'll also need to affirm time and the money management of the trade. I know you're getting tired of it, but that's why I like Elliott Wave so much, because it confirms the trend. These 5 legs up tell me the trend is up. And the 5 legs also show me where support and resistance is. Now to the next thing, when I come into resistance on an uptrend, that tells me this was an impulse wave into resistance. So what's the next thing that will happen? That's right, a counter trend trade. Letting me know as price came up, it's going to make this rainbow effect back down, stalling out. Based on statistics, price should not continue higher. Now, depending on how low this support is, will help me with time and also give me an indication of price so I know how to trade it. And that's why Elliott Wave is so powerful, because it does these 5 things for us: trend, support and resistance, momentum, time, and money management. So we have to consider each of the 5 steps of trading. Are we in an uptrend? Yes. Then what? Are we up against resistance? Yes. Then what? Do we have an impulse wave up into that resistance? Yes. Then what? Well, last time we saw that price fell off. Based on a bear call spread, this trade would have worked. And using the same scenario, we're not sure if this trade would have worked or not. So we have to keep that in mind when figuring out what to do now. And that comes to the action of money management. Based on my probability right now of 2 trades, I have a 50% win and a 50% loss chance here. But the thing that's going to keep me from taking this trade is earnings. I can't properly trade into earnings because I don't know which direction the trade is going to go. So then I have to look for another trade. Zim, do we have an uptrend? Yes. Are we making higher highs? Yes. Then, did we come into resistance? Yes. Do we have an impulse wave coming into that resistance? Yes. What happens last time? We saw the impulse wave come into resistance. One time it went sideways and another down. Based on the results of these 2, that gives me a 50-50 chance of this working. And we're past earnings and dividends, so there's not a problem there. But the if-then process doesn't stop there. I have to consider the time it's going to take for this trade and the money I'm going to allocate to managing it. If it works out, then great. There's nothing to worry about. But in our 4 probabilities video, you saw that there's different patterns that could happen. Maybe price just hugs this top resistance line, not going down, losing the value of our money. So I need to have a plan in place. If this happens, then what? If price really shoots up from here, then what? Well, I just start back with the original concept. Am I in an uptrend? Yes. Maybe I duplicate my channel and say, am I against resistance? Yes. Do I have an impulse wave? Yes. Is support far away from my current price? Yes. Do we have any other issues of dividend or earnings? No. With all those things in mind, this would be great for a double down from my first trade. We were looking at this one this morning. Uptrend? Yes. Against resistance? Yes. Up momentum? Yes. Past earnings? Yes. Far enough away from support? Yes. Last time you were here, did price fall off? Yes. Giving us good statistical value that this trade would work. If it shot up higher, then what? I would duplicate the same exact strategy, process, thinking behind my original entry point. Just duplicating would be the only change that I would make. But if I'm going to put down 2 times the money up here, I have to be considering how much money I'm going to be putting here so I have enough leverage in my account to take this secondary trade, being prepared for an if-then-what process. Instead, what happened is price quickly moved off almost 6%, not getting us into the trade. So then what? We take our money off the table and find another trade. RCII in an uptrend? Yes. Up against resistance? Yes. Actually making a pennant pattern? Last time against resistance, it fell off. First time took 38 days, about 18%. Second time, 15 days, 23%. So this seems like a good trade setup. And with no corporate news coming up, we think there would be no drama behind this trade. But with price action, the drama could be is if price just stays right around this resistance line, never falling off. So if we enter into the trade right here, what are a couple things that we can do? One is we can go ahead and add for a higher strike price. Instead of using the 65, we can raise it up to 70. But what happens if we do that, but it never goes up high enough to get us into the trade? That's fine. Cancel it out. Look for another trade. You'll see that I've used the if-then process over and over in all aspects of this trading system. Even with the bear call spreads, instead of using this as a target or trying to figure out the right Fibonacci level for it to come to. When considering all of the possibilities in trading and targets, I've concluded that bear call spreads are the best for an if-then what process rather than having a target way down here. Of course, you'd make the most amount of money, and so that would make you the happiest. But because a bear call spread gives you the highest point, it means whenever it goes against you from that highest point, it doesn't have to go back much. Think about it. If you had a naked put that you did in the money, you'd lose an immense amount of money if it went up. And it would have to go immensely lower than when you entered the trade, making up for time decay. Whereas your spreads just have to close below your lower strike price to make you all of your money. Doesn't that seem like a better if-then-what process? So in conclusion, based on results, gives you that statistical value that you'll be able to apply with confidence that the trade will work. But nothing's 100% guaranteed, so always have that if-then-what process so that you're ready for the problem. Is a problem really a problem if you already know that it's going to come? You're a confident and knowledgeable trader. You know the setups. So let's just make sure our thoughts match the if-then-what process based on results.